On behalf of the IBPC, I welcome you all. My name is Sibi Sudhagaran, and welcome to the Business Breakfast Meets. This being the first in the series that we plan to have it on every Thursday mornings, except the Eid week. And the next one is going to be on August 2nd. The theme is HR and the topic is managing workforce, how to get the best out of your human capital. August 9th is going to be the current credit crunch, causes and forecast. So that's the theme is banking. To start with today's session, let me welcome our moderator, Ms. Deepthi. She's sub-editor, senior sub-editor from Khalij Times. Let's give a round of applause to Deepthi. Thank you.
Welcome everyone to our panel discussion. Today we're going to talk about the impact of VAT and the new reforms on UAE businesses. And I'd like to invite our two esteemed speakers, Mr. Deepak Babani, the Executive Vice Chairman of EROS Group, and Mr. Rob Dallacosta, the Director of VAT Practice at KPMG. Please, everyone, give them a warm round of welcome. All right, sir, let's get straight to the questions. Okay, the first question is to Mr. Babani. The UAE cabinet has announced a spate of new reforms, visa-related, to ease the cost of doing business. So how do you believe this will help or facilitate UAE firms, and will it improve the ease of doing business in the country?
Good morning, everybody. Before I start answering Dipti's question, I'd like to put some background into the discussion so that you're able to understand the VAT implication much more effectively. So first of all, cost of doing business. I have some reference chart here which says that if you take the index as 100, in 2012, if the index was 100, in 2013, it dropped down, cost of doing business dropped down to 98, and in 2014 to 99. But from 2014 to 2017, it's been really going up very rapidly. So for example, 2015, it went to 111, and 2016 went to 134, and 2017 went to 158. So cost of doing business between 2012 and 2017 went almost up by 58%. So if you look at the previous year, 2016, it went up by almost 60%. Now, which were the main contributors to this? 27% was contributed to cost of people. So when I say cost of people, it was cost of living, because government regulations changed where we had to give much more. Of course, these are positive ones, but it costs companies for example, the cost of living of allowances to people. Number two, it was compliance fees. Number two, the municipality had certain compliances for accommodations, so that cost got added up. And number three, because we went from a normal business into modern retailing, where business moved from normal souk into the malls, customer expectations got better. So the cost of people itself was about 27.4%. The rentals was about 23.6%. Now these, when it's 23.6%, I'm talking of rentals into malls, which were more frequently, they were like destination malls. So these rentals went up by almost 23.6%. Promotion fees went up by 0.4%. So previously when we had to do, for example, a sale or a promotion, we had to pay only Dubai fees to Dubai. And those fees also were rapidly increased year on year. Then these fees were introduced by Abu Dhabi, and then subsequently by Sharjah, and then all the Emirates. So not only paying the fees, but also getting the regulation to get these passed through the government, put an additional burden on cost. And there were other 10%, which was regulation, compliance fees, competition, inflation. So 60% is the cost of doing business. So that's a whooping number. And that is mainly causing the worry into the retail business. Number two, a lot of people say that the implication of the VAT. Now, for example, if you look at between 2006 and 2009, the inflation was anywhere between 6 to 12%. business was not that bad. Today, the inflation average in the marketplace is estimated at 3%. And if you assume that the VAT added on to this, and if you roughly take about 35% or 40% of salary is VAT implied, because residents rents are about 30-35%, and education doesn't imply VAT. So if you take another 2.5%, so actual inflation now would be about 5.5%. If you compare this to 2006 to 2009, where the inflation was 6 to 12%, and markets was not as bad as what it is today. So these are the two impacts which I would like to first put it before I talk about VAT, the impact of VAT. Now coming to your question about the what are the current reforms that the government has announced. First of all, previously for every employee we would pay a fee of 3,000 dirhams for every employee that came in. So if you look at the number of employees in the UAE, there was a whooping 14 billion dirhams that was lying in the government exchanger, which would normally be circulated in the trade. So that will get free once this announced. And that is being replaced by an insurance which is going to cost 60 dirhams per employee. So these 3,000 basically was, you all know, was, for example, if the employer cannot pay the end of term benefits, the government would pay the employee the term of benefits, his return ticket back home, or any kind of unsettled fees, unsettled entitlements that he had, the government would pay. So this 60 dirhams that will now cover up the 3,000. Plus, besides that, it will also cover up another 20,000 for injury at workplace. So for example, if it's a small company and an employee gets injured and the company doesn't have money to pay him, the government will pay that 20,000. So all in all, this has brought 14 billion into the economy, which is a very positive sign. Number two, small but a good gesture from the government. Very quickly, they have reduced market fees from 5% to 2.5%. And also, normally when you go to a restaurant or a hotel or any outlet, you pay 10% municipal fee. This has been reduced to 7.5%. So there's a 2.5% rebate on both these fees. Third point was the relaxation of visas. Now, how this has helped is, for example, transit visas now on arrival are free of charge. And if you extend it after 48 hours, the charge is only 50 dirhams. And also there are special counters at all the airports where they facilitate very quick clearance of these visas so that people have enough time to look at the city. Obviously, this will bring in tourist traffic into the country, and especially if you know that Emirates Airlines is very well connected all over the world, and people transit and want to come inside the country. So I'm sure that once they come in, they look at the infrastructure, they look at the first-class facility that Dubai has. This will bring them more and more again and again to Dubai. The third factor, which is I would call, there are two parts to it. One is the impact on business, and the other is the hygienic factor. So let's talk about the impact of business. So on the business impact, they have made, especially the 6 months visa for job seekers who are coming to Dubai is now going to be made available. It's not done so far, but it's going to be made available very soon. So the cost to company of recruiting somebody would become much less than what would be otherwise. And also the speed at which we recruit people will be faster. Normally, if somebody resigns and you want to replace him, it takes averagely about 4 to 5 months to bring another person in if you have to bring them from home country. But if these job seekers are available here, obviously we can get them on board quickly, and obviously that will save not only efficiency for organizations, but also will be able to help us to kind of reduce costs of traveling to these countries and trying to bring the people here. The other is the hygienic factor, where 10 years visas to professionals and business people will be given, so that, I know many doctors and nurses who, because of this short visa, are not sure whether they will have the job, have migrated to, for example, UK and Canada. And I think this will probably reduce the immigration effect to those countries. And talent which has been built here can be kept here. And last but not least, the visas, 10 years visas to students. The first 5 years they're studying here and extended by another 5 years, so that whenever they graduate out here, they can find jobs in the local market. And of course, whatever they studied here, they can imply that local talent into the country.
All right, sir. Thank you very much. Mr. Rob, you specialize in VAT. So it's been 6 months since the implementation of VAT in the UAE, and SMEs are a very vital sector of the UAE economy. So how do you believe SMEs have adapted to this new reality? And can you tell us about their preparedness and in terms of the tax return filings, how have they been progressing?
Sure. Good morning, everyone. Just before I answer that, I found Deepak's comments about the impact of the government's announced reforms somewhat illuminating when you look at it in the context of VAT. The introduction of VAT was meant to take something like 20 billion dirhams out of the economy, out of people's pockets and into the government. And it looks like they've put all that back through these other reforms. So the actual impact on people's spending capacity seems to have been significantly offset by these recently announced reforms. You've got 20 billion coming out, and you've got something like 14 or more billion being released back to businesses. So that's an important factor when it comes to looking at, well, is VAT really the villain in terms of what's happening in the marketplace to people's sales? In terms of answering your question, I don't think there's anyone in this room that would dispute that the introduction of VAT was a challenge. It wasn't a challenge just for businesses, it was also a challenge for the FTA to get themselves prepared and ready for the introduction. Unfortunately, what we saw was delayed legislation. It didn't come out until the end of November, giving people a very short time to prepare their IT systems for its introduction. Then we had some important cabinet decisions about designated zones, about what healthcare and medicines would be zero rated, not come out until after it was introduced. And then they were backdated to the 1st of January. So all of those things made the transition difficult. And on top of that, we had, and you probably all had experienced, glitches with your registration process, glitches now with the VAT return process, which seems to be changing day to day. Every time you go into your portal, there's a new button appearing. The other day it was voluntary disclosure button appeared from nowhere. A lot of people panicked, thinking, I've just submitted my return and now there's a button saying I need to make a voluntary disclosure. So the timing is not helpful, their explanations are not helpful. So those things do make it fairly difficult. We still see a lot of confusion in the marketplace around tax invoices. What's a valid tax invoice? We're seeing some businesses push back on paying their suppliers using the tax invoice as an excuse. The VAT is an excuse for not making payment. So we're seeing a lot of those practices in the marketplace, and those things will take some time to settle down. But I guess at the end of the day, businesses are filing their returns either on a monthly or quarterly basis. People seem to have, tried to make the best of it, as has the FTA. So it is a work in progress. It will continue to be a work in progress for at least another 18 months as more guides and more things come out to explain the interpretation of the law. In terms of VAT filing, I think the biggest impact really has been on those people in a net refund position. If you happen to find yourself in a net refund position, then if you don't elect to carry that refund forward but ask for it to be paid, then it'll automatically trigger an information request from the FTA. You'll be asked to fill in this incredibly detailed spreadsheet with a dump of all of your sales data and all of your purchases data. And then a number of things will happen. Either it goes into a black hole and you never hear any more, or they ask you for some invoices, and surprisingly, they ask you for invoices about your pantry expenses. That's what we've been experiencing, about the coffee and tea and the milk you buy for your staff. And then they reject those and they reject your refund claim and say, well, you have to go and resubmit. So it's a delaying tactic. They have 20 days in which to respond to your claim for a refund. And their response is, please send us more information. After they've done that, the law does not impose any other time limit on them to respond. So they can hold your refund indefinitely. So that's unfortunate. In the marketplace, we're seeing that a few of our clients are now starting to get their refunds paid. Not many, very, very few. The ones that generally are getting them repaid are large enterprises who have relationships with government. Others, on the other hand, are finding it much more difficult to get their refunds. So, but for other people who are filing their returns, it's generally, the government's happy to accept your payment and leave it at that at this stage.
All right, thanks, Rob. Mr. Vabani, you are one of the bigger enterprises in the UAE. So what have you been seeing? Are consumers cautious in their spend, especially for big ticket items in the wake of VAT? Or have they adapted to the new reality and it's life as usual?
So let me say that, like many countries, for example, Robert will vouch for this, that pre-VAT, you found that a big spurt in the sales, and the post-VAT, there was a drop in sales, and then 3 months, 4 months down the line, they plateau out and get normal. Similar is the situation in UAE. We had, for example, though it was announced late in November, but December was a very good month. In fact, the last 5 or 6 days of December, I remember, our sales went up to including 10 times of a normal day sale. So that was the kind of buying that took place before the VAT. Yeah, subsequent to VAT, even in spite of the shopping festival, and a lot of companies tried to absorb the VAT, but still we found that the sales in January, February were dull. January was more or less because shopping festival was good, but February was very dull. But come April, May, we are seeing that it is plateauing out. Now the difference is that many of us might feel that the impact today is because of VAT, but as I said earlier, the current situation in the market, for example, if you look at the cost of doing business, which has gone up so high, and also because of the geopolitical situation. If you look at currently the geopolitical situation in this area, the war in Yemen, the political situation with Qatar, with Trump, trying every day new rhetoric with Iran. So these situations, Syria is not doing, a lot of violence in Syria. Look at Iraq, every day situation changing. All these geopolitical situations are having impact on the economy of UAE. And as I said earlier, for example, if 3 to 5% VAT will actually not make a very serious impact on the buying pattern. But the general psyche of people, because of the geopolitical situation and the cost of doing business, which has gone high, has actually caused the current impact. So I feel the impact of VAT would have normally died down, like in many countries, like they have introduced in Japan or in Malaysia, or for example in Singapore. So.
All right, thank you. Mr. Rob, now that VAT has been implemented, what do SMEs have to do now that it's out of the way? And do you think all businesses that meet the mandatory registration threshold, have they come under the tax net? Is everyone on board right now?
That's certainly a useful question, and one that people should take some heed of, insofar as VAT compliance doesn't stop with implementation. The law is going to evolve. It will continue to evolve, as I said, for at least another 18 months. There are interpretations to be had. It's ambiguous. A lot of us have had to take a commercial call on how to proceed with a particular transaction because there isn't clarity from the law itself. And we've had some guides come out, and they will continue to come out. So when those guides come out, they do give you some indication of what the authority's view is of how they're going to apply the law. Now, it doesn't mean they've got it right. So if you don't agree with their particular position, then it can be open to challenge if it's not backed up by the law. We're seeing every day now some clarifications come out. They released one recently on, can you put a post office box on a tax invoice rather than a physical address? And they've now said yes. So a lot of people were confused about whether they could use a post box and whether that was valid or not. So again, we're not really sure how strict the authorities will be in applying the law, but that seems to indicate that they're going to be fairly strict. We're still waiting on some important cabinet decisions, particularly one about what government activities are going to be sovereign and therefore out of scope. So we're seeing different government agencies assume that some of their activities are out of scope and they're not charging VAT, which is fine for you as a recipient. You don't care. If they do charge you VAT, you hope they'll give you a tax invoice, but unfortunately they weren't prepared because they assume they're going to be excluded from VAT. So good luck trying to get a tax invoice out of some government agencies. It just doesn't happen. So then you'll need to wear that cost. So some of those things still need to be ironed out. We had recently the guide on applying for a refund being reissued and updated. Now, when they update the guides, they don't exactly tell you what they've changed from the earlier one. So you need to read the whole thing to look for the fine print and the change. And what they've done now is, if you apply and tick that box for a refund to be paid to you, you now you must upload a letter from your bank outlining and confirming the details of your bank account. If you don't do that, they're not going to pay you your refund now. So that was only earlier this week. So you as a business need to be vigilant in terms of not only the changes in interpretation and the guides that are going to come out. And we had, for example, while we're waiting on some cabinet decisions, we had some surprise ones, such as the different treatment for gold and diamond traders. That just came out of the blue. And then we had another one about international event holders. So there are constant changes happening, and if you happen to get caught up in that particular industry, then you need to be aware that things have changed. And quite often it changes, from that date. So you need to be very vigilant about those sorts of things. In terms of compliance, in terms of, as I said, people's experience, particularly when it comes to refunds, is the fact that a lot of effort's going to go in to try and delay the payment of your refund, which is unfortunate. If you elect to carry it forward, and some of our clients have elected to carry their refunds forward because they just aren't prepared for an FTA audit at this point. They just don't want to have to provide them with all of this information because their systems and their processes aren't up to date yet. So they choose to carry forward the refund. But look, that impacts on your cash flow. You can only do that for so long. At some point, you're going to have to try and get that refund back. So there are lots of important considerations. There are still lots of teething problems and lots of issues in relation to you filing your returns. As I said, we've got this voluntary disclosure button that all of a sudden appeared. So if you need to go back and amend a return, you can now go back and amend. But as soon as you file a voluntary disclosure, there's a $3,000 automatic admin penalty for doing that. And then you'll note that on the form, the voluntary disclosure form, they're keeping count of how many voluntary disclosures you make. So you want to be careful about the number of times you go back in and volunteer to make those disclosures, because it's being looked at. We're not sure why, but potentially the more disclosures you make, the higher risk you're going to be of having an audit. So there are lots of little practical things that you need to be careful about in terms of just your ongoing compliance.
Sure. Babani, sir, you spoke about the cost of business shooting up over the past few years. So what do you think the government can do more to address, enterprises' pain points? What is your take?
Yeah, let me start. The first most important is, in most countries, the VAT is refundable. So I think, number one, they need to found a mechanism where the VAT will be refunded to tourists. So, and the ease of cash management of business. Because this has come all of a sudden and, there's a credit crunch in the market, the government should allow people to file returns for a longer period, say, instead of 2 months, maybe 4 months or 5 months, so that they can manage their cash more effectively. I think that's first. Number two, rationalization of promotions and regulations that allow flexibility and lower cost. As I said, cost of promotion is quite high, and in fact, even the mechanism of applying that is very, is diverse. So I have to go to each economic department, each emirate, and file those promotions. So those costs go up. And if they can lower the cost, because the cost, for example, once upon a time a promotion would cost 2,000, it costs 10,000 now. So and if you imagine all the Emirates, if you have to file those returns and then paying those fees. So looking at one common point where, those promotions can be filed, and also look at reduction in cost of those promotions. The third most important is the commercial rental regulation to address rent escalation, various charges and fees, security of information, and exit rights. Now, what do I mean by this is, if you look at most of these malls, they have been escalating their costs on a year-to-year basis as far as the rent is concerned. So some kind of commercial law that limits the increase of rent, or, some base rent like we have RERA law for residential purposes. Number two, most of these malls, for example, the maintenance cost changes from something like 50 dirhams to 100 dirhams. So for example, I don't see any difference between A mall and B mall. It could be more than 10 or 15%, but a mall charges 50% for the common area maintenance, while another mall charges 100. There is no transparency as to where that money goes, or it goes into somebody's pocket, the mall management pocket, or wherever. Also, for example, there are fees like marketing fees. The mall charges you marketing fees. Where that 3% or 4% goes, I cannot see that kind of marketing being done by most of these malls, where that 4% or 5%. So a little more transparency on that as well. Also, we see that these days most of the mall owners are themselves into the retail business and franchising business. And as tenants, we are supposed to provide all our information of sales to them. So very critical information that is critical to our business is available to the mall, where they in turn can come back and compete with us. So there has to be some regulation as to how they use that information from a security perspective. And last, most of these malls have long-term contracts. You have to sign a 3 to 5 year contract where they take all the checks in advance. So for example, if after 2 years, for some reason, your business is not doing well, they don't allow you to exit till you don't pay huge amount of penalties. So some kind of regulation to control this as well. Again, this changes from mall to mall. Where the demand is more, the mall insists on signing 5 years lease. Where the demand is much less, they make you sign at least a 3 year lease before they get in. So that's as far as the commercial rental is concerned. Also, recently there are a lot of regulation as far as the products are concerned. So for example, in the case of electronics, we have a lot of safety regulations established by each emirate. For example, Dubai has a regulation for safety. Abu Dhabi has another regulation for its own safety. And these are different from each other. And to top all of this, we have another regulation, which is the G mark, which is for GCC, which is lower than the Abu Dhabi regulation. So meeting this multiple regulation for the same amount of product, and we need to pay these fees every year. For example, if you look at normally in our business, any major appliance like a washing machine or a refrigerator, the life cycle is at least 2 to 3 years. So why should I be filing my specifications on a year basis and pay fees, number one? And that also to multiple authorities and multiple compliances. So there has to be one common compliances. For example, if there's a G mark, we all GCC countries meet the G mark. But then Abu Dhabi says, no, we want to have one standard up. So then I need to meet the Abu Dhabi regulation and also comply by that. And then I need to meet UCAS regulation here. So one regulation for the entire country, one filing, and the filing has to be reasonable so that the security of the product, or for example, safety of the product is not compromised, but at the same time, the fees are not charged because, we need to file returns, and cost of filing the return is quite expensive. Flexible labor laws and rationalization of fees. Again, if you see, free zones give you a 3 year visa, and the cost of visa is much less. In turn, if you have an entity in the emirate, you get a 2 year visa, and the cost of visa is much higher. So rationalization of these kind of fees that are happening is another area where the government can help in bringing down the cost of business. And last but not least is looking at some kind of low-cost housing. If some of you have been here in the 1980s, roughly a 2-bedroom apartment those days would cost anywhere between 30 to 60,000. And then we had Sheikh Rashid establishing these colonies, which are in Karama, Gases, and Satwa. And these brought the rents down to as low as, for a one-bedroom hall was, a 1 BHK would cost you about an annual rental of 6,000 dirhams, and a 2-bedroom would cost anywhere between 12 to 15,000 dirhams. Now, when this happened, a lot of stability came into the marketplace because, for example, if there was a white-collar worker getting a salary of 2,000, and for example, wife gets a salary of 2,000, at 4,000, the rental portion of what they would spend was about 10 to 12%. So there was enough money to spend on other things. While today, we are spending like averagely anybody spends about 30 to 35% of his rental on accommodation. Now, very important is that in every society you require various strata. You don't require only qualified people. You require cleaners to clean. You require technicians to maintain the AC. So unless everybody in the society is not happy and comfortable, I think there is an imbalance in society. Just to give you an example, I was once a few years ago traveling in Malaysia in a taxi, and I just had a casual chat with the taxi driver, and I asked him, "How do you like this place?" He said, "I love this place." And the next question was, "Why?" And he said, "Well, I have a 2-bedroom house of my own with 2 children. I drive this taxi. Was educated, of course. And I have got a 30 years loan from the bank, from the government. And I have a low-cost housing. So I have a 2-bedroom house where I live. And I'm very happy." Similarly, I met a very educated taxi driver in Singapore. Same story. So government should look at some way, either themselves building low-cost housing or enable developers by giving land at a low price, so that every strata of society is able to live comfortably, and then obviously that brings about stability in the country.
All right, sir. That's a great set of recommendations. Mr. Rob, do you think VAT has actually led to an increase in the cost of living in the UAE, or is it just a perception from the public?
I guess trying to untangle the impact of VAT from a whole lot of other factors, such as changes in oil prices, changes in government fees and other reforms, is always a tricky issue for anyone who's trying to work out, well, what was the actual impact of the VAT itself. There's no doubt that even at 5%, VAT will have impacted on people's cost of living. The question is it 1% or is it as high as possibly 3%? It's difficult to work out. I guess one factor is that given that, unlike KSA, the UAE has chosen to zero rate a great range of services such as medical, health, education, whereas in KSA all those things are taxed. So one would expect that the large list of zero-rated supplies, the list of exempt supplies under the VAT law in the UAE will have muted any inflationary effect. But as I said, it's obviously not going to be 5% because of that. It'll be something less. And we've seen there were forecasts when it was being introduced at, ranging from 1 to 3%. So not a significant impact, and probably not one, even though it was small, as we've heard from Deepak, it's enough to change people's behaviour, with people, flocking to the stores to avoid the 5% in the lead up, and then obviously there's going to be a bit of a slump after that. But look, it only takes about 6 months or more before things start to return back to normal trends. But I think that, as I said, in the introduction phase, it was important to be prepared to ensure that, and I'm sure Eros was, stocked up to meet that demand in the lead up to the introduction. I do want to comment on one thing that Deepak mentioned. He mentioned the tourist refund scheme. I mean, it's in the legislation, it's just not activated. The government had originally said that, look, at 5%, it just isn't worth our while to introduce a scheme and run a scheme. They've now, obviously under pressure from retailers, high-end retailers, have decided now that, yes, they will introduce a tourist refund scheme. They've said that much. We haven't got the timing of it yet, but they have been in negotiations with a third party to run the scheme. So there's a number of companies around the world that run tourist refund schemes for various governments, particularly in Europe. They usually take a small percentage, so that means that you know, depending on how the scheme is set up, you might not get a 5% refund, you might only get a 4% refund. They keep a commission. We're really not sure. But one thing that the government has said here is that, unfortunately, it's not going to be a universal scheme. Retailers who want to participate in this, who want to be able to give their customers the ability to claim a refund, will need to register and be approved. So that means that not everyone will be, and it's another process. It's going to be another registration process that businesses are going to need to go through. So as I said, we're not quite sure when that's going to be established, but the government has indicated that it will. So yeah, it's something I guess for some people to look forward to. As I said, I'm not sure what the criteria is going to be for who is going to be eligible to apply for this scheme.
All right, thank you. We're open to taking a few questions from the audience, so if anyone's interested.
Unfortunately, as of yesterday, the Immigration or the Labour Department doesn't have an answer. I personally contacted the Immigration Department yesterday. My visa, I'm an industrialist, I have an industry license, and it's falling due in September. I'd like to renew it next month as I'm traveling. I called up the Director General's office. I was put on hold by his assistant who I wanted to speak to. After 3 minutes of pause, he said, sir, there is nothing like that. I said, are you serious? It's on your website, it's announced in the newspapers. No answer. The point I'm trying to make is these were very welcome announcements made that brought some cheer to the average businessman and professional or individual. What really needs to be done is the implementation and guidelines for some kind of a time frame, so that people understand when this is going to be implemented, how it's going to be implemented, and people are not left asking questions. The second thing, I see Deepak's point of view, which is more related to retail sales through malls and, high-end retail outlets. But there is one particular aspect of business here which needs to be understood by retailers and major brand owners. Every single luxury brand in this country is almost between 20 to 35% more expensive than, let's say, the United Kingdom. You go and buy a luxury brand, Chanel, Louis Vuitton, or whatever in that range, and you will find that there's a difference of almost 35%. Now, the normal hue and cry is because the mall rents are high, but we don't know how much of that 35% is contributed by the mall rent and how much by the individual retailer. I'll give you an example of a very average daily brand, Marks and Spencer's. You compare the UK price, which is covered up by a local label in the UAE dirham, and if you convert the price and look at the sterling, which is below 5 dirhams, you will end up calculating a rate over 7 dirhams. Whereas if you go and shop in the UK, you'll get a VAT refund, which will be around 12.5%. Last but not the least, talking on rents and issues related with that. People who basically have large workforces like us, we are dependent on accommodation, which is basically, unfortunately, termed as labor accommodation. These accommodation rents, for various reasons to circumvent the rent committee and the laws on rent, are now being split into a basic rent and then what they call service charges. Some landlords tend to break that into 60-40. Now, what is the crucial part here? Because they can't increase the actual rent, they increase the service charge. And these service charges now attract VAT. So you're paying 5% on that 40%, whatever that amount is. And there's no regulation to control that. There are other various issues. I generally do not crib or grudge VAT. Every government needs to raise funds in order to be able to spend on the average, lifespan of anything that the country invests in, whether it's roads, buildings, whatever the infrastructure is. This is a great city. The wise rulers have done a great job. Money has to come from somewhere. But what really needs to be addressed is the additional cost of business, whether it's by visa charges or various other incremental increases that Deepak pointed out, that need to be curbed or controlled. It is the general feeling in the market that businesses are down in every single sphere. Added to that, when you file your tax return, I mean the VAT return, whether you got paid or not, you got to file that tax return and pay that money to the government. And then hope that your customer will pay you back if you are, in the industrial business. So there are various issues that are related, which are a socio-economic related issue that all needs to be addressed. I have one suggestion here. There are business councils just like the IBPC. And I think it is necessary that a thought process of making recommendations to the Ministry of Economy by various business councils with constructive, realistic suggestions through the Chamber of Commerce might help. Here we all sit, have breakfast and chat and share our points of view. Well, it's not going to get us anywhere. The government does listen. They are very welcoming. And I would strongly recommend that various business councils have some form of a think tank of advisory people that form a polite suggestion, pointing out what the business community is actually experiencing. Thank you.
About 150 gold dealers moved from Dubai to Turkey, which was a reverse process previously from Bahrain and Kuwait. So they have made the changes, and that's bringing some positive result.
Yeah, I am Bharat Narayan Moti. I am CEO of Bloom Business Strategies. My question relates to the state of economy. I find a dichotomy in the economy where government is flourishing thanks to good oil prices, whereas the private sector is languishing. What is the current scenario and how you see the prospects down the line? My second question is relating to property prices. I think the real estate sector is in languishing now, and the future do not look very promising. And the current economic situation is such that I don't see any future prospects for the real estate sector in terms of any uprise. KPMG would have done some research on that. Can they throw some light how they see the economy overall and how they see the real estate sector down the line? Thank you.
My expertise is on VAT, so I can't comment on generally what our view is on where the economy is headed, other than to say that I think the government, certainly when it introduced the VAT, was conscious of the impact it might have on the real estate sector, and surprisingly decided to tax at the rate of 0 new construction that is sold within 3 years of construction. So that's unusual because in KSA it's taxed at 5%, as is any new construction in most other VAT regimes. So the VAT should not have had any impact at all on the property sector as such. And obviously the bare land is treated as exempt. So It acknowledged and has gone to a great extent to forego significant amounts of revenue from new property development in favour of clearly supporting that industry. So there are a lot of other factors, I guess, that impact on real estate prices, and I'm not an expert in that area, so it's not something I unfortunately can comment on.
Hi, good morning. My name is Surinder Sareen. To KPMG, sir, there are going to be lots and lots of assessments from the FTA authorities, and it's going to be suo moto most probably, and not to the acceptance of the business people. So what are the provisions for appealing the VAT assessments, and how effective are they?
I guess they haven't been tested yet. As I said, at the moment, the focus has just been on people claiming refunds. So I'm only aware of audits having been undertaken where people have asked for a refund to be repaid. Anyone who's been in a taxable position at this stage has not had an audit. To some extent, that reflects the fact that, you know, paying refunds is a higher risk, and the government puts its efforts into ensuring that the refund claims are legitimate before it passes those on. The other is that the government is struggling to hire enough auditors, so it doesn't have a lot of people to go about auditing at the moment. They had targeted something like 400 auditors. I don't think they've got even 100 at this stage. So it's going to be some time, but audits will come. I mean, they will come in due course. As I said, it's an evolving process. They will get people on board. At the moment, unfortunately, the people that they do have very little knowledge about VAT, and therefore they do only go for low-hanging fruit. As I said, when they do test invoices, they're looking at pantry expenses, as to whether you're buying coffee, tea or what. And I mean, the law does say that if you acquire these things in the normal course of a business meeting, you are able to recover them. But they've rejected that. And we went back and challenged them on that. And they said, oh no, our advisor told us you can't have it. I don't know who their advisor is, but I think they're wrong. But they've taken a particular view, and we've had other people who took them on and said, okay, which pantry expenses specifically are not acceptable? And apparently water and coffee is okay, as is milk, but not sugar. So whether it's a sugar tax by default, I don't know. But, you know, it's getting down to that. You know, you're dealing with people who have got very little knowledge of the law. It's going to take time for them to develop their knowledge and experience. So practice doesn't always match what the law says. But look, there was opportunity to go backwards and forwards at that level. But there is a process. The FTA, when it was set up, you know, over a year or so ago, it has its own basic laws. And those laws set out all the administrative procedures for all new taxes in the FTA. So it's the basis for excise, for VAT, for any new tax that might come in the future. And if you have a look at their legislation, there is an appeals process. You can ask for a decision to be reviewed. If you don't like the outcome of that, it can go to a committee. If you don't like the outcome of that committee's response, you can take it to the courts. So there is a process. I don't know how successful people will be in that. I know that some jurisdictions are more litigious than others. I understand that in India it's not uncommon to go to court and be there for years. I'm not sure how that process will be looked at here in the UAE, or how easy it is to take those steps. But the law does provide for an appeals process. It's set out there. It's too early now. It generally takes, as I said, a couple of years before people find that there's a significant issue that's worth litigating. And that's the experience in Australia and other countries, that litigation generally doesn't come on board until, 2-3 years down the track. As I said, we're not seeing significant audits at the moment. They're just denying some pantry expenses. I mean, so nothing significant at this stage, certainly nothing you'd want to go and litigate at this stage, so it will be some time.
Thank you. To Mr. Babani, sir, So you're one of the pioneers in the retail industry, sir. How much sense it makes to shut down the retail outlets and to work directly from the warehouses because of the rent factors through the e-commerce, promote that?
I think retail space still in the UAE has its importance, and especially customers, today's mantra for retail is customer experience, and that can only be, take place in a mall and then in an environment where, it's conducive to retailing. So I think that retail space will still remain. Having said that, yes, e-commerce is in very infant state and will take a bigger share. But again, having said that, the retail stores will still continue, and customer experience is going to be a very important aspect of the retail business. So I think that will still be very important going forward.
Yeah, good morning. I'm Nimesh. My question is to Mr. Bob. Recently, the government has brought about relaxation in the visa guidelines and all that thing. Now, also more so with respect to the setting up a business in mainland vis-a-vis free zone. What do you foresee the introduction of corporate tax in this regard?
So again, I'm an expert in VAT, not in corporate tax. I do understand that corporate tax is sort of there, but it's not been implemented or processed with. And the indications that we have is that, they're going to bed down excise first. They're going to bed down the VAT, as I said, which will take a number of years. And then whether or not they'll move to corporate tax is going to depend on a lot of factors, including how the economy is going, what the price of oil is doing in a few years' time. So I guess at this stage, we're not seeing any development in corporate tax, and it's likely to be some time off.
Thanks, Rob, for educating us on such points, but the problem still remains, When I was submitting my first tax return, I'm Amit from Prism Advertising. We run an advertising agency. So when we were submitting our first tax return, our chartered accountant says, don't tick the box which says you want refund. Otherwise, you might get into problem. Now, the thing is, the problem which we're facing is not about VAT and costs going up. The bigger problem is the cash flow. Because you pay tax in advance, and there are unpaid invoices at times, and some of them could take a lot of time to be paid. And in that case, how should we handle the cash flow? Is there a way of delaying any invoicing or keeping something like a temporary invoice till the time you get paid if you're unsure of certain payments? Is there something like that which is in provision of the rules and regulations of VAT? Because the bigger problem is the cash flow. Then just 5%. 5% is okay, we're all getting used to it, and I think that's the way forward for the government and for the people of UAE. But the cash flow is becoming a challenge in the market for everyone. I had a talk with a lot of other people with a similar feedback.
Yeah, I guess as I mentioned, some people are trying to avoid having an FTA audit by not ticking that box. The experience is if you tick that box, yes, you're going to get an information request. Quite often you get an email that says, do you really want to claim the refund? So they're trying to give you the option to change your mind and just carry it forward. But they say if you do, then you need to fill in all this information. And as I said, the information they require is, the details are just incredible. And some businesses just don't automatically have all the details that are required to fill in that form. So people are going back and saying, yep, please carry it forward. As you mentioned, you can only do that for so long. I mean, we're 6 months in now. Some people have been doing that for 6 months, particularly if you're in a free zone. You're going to be in a net refund position because all of your supplies are either out of scope and not subject to VAT, and you're claiming back all of your costs. So you're going to be in a net refund position forever. So you can't continue to defer your refund claim because of the cash impact it's going to have. Now the question is there much you can do about that? Well, not a lot, unfortunately, because the VAT law says that your liability is triggered if you're supplying goods on the earlier of making the supply or issuing a tax invoice or receiving payment. So you don't have any real option. If you give the goods to the person, that's triggered your liability, whether you invoice or don't invoice, whether you receive payment or don't receive payment. So there's no real way of gaming that. In the services industry, it's not when the supply is made, it's when you basically invoice or receive payment. So they're your two options. So you can either not invoice, but then you don't get paid. So you're foregoing the cash flow on the VAT, but you're also foregoing the cash flow on your whole recovery of your costs. So unfortunately, there really is nothing that you can do. All we can do is, and we are seeing the government, I think, is starting to wake up to the fact that they do need to process these refunds a little more quickly. So there's been a bit of a trickle, but you know, it's not a good outcome. A lot of businesses are suffering because of enormous amounts of refunds that they're not able to recover. So it's going to be down to, I guess, trying to put pressure on the administration. That's easier said than done, because there's really not many mechanisms where you can try and lobby the government for improving its processes. I guess they're trying to do that, but it's unfortunately, it's at the cost of business. So the answer, unfortunately, is not a lot. You're going to have to really bear that cost, unfortunately.
Thank you, Mr. Rob. I think in the session on August 9th on cash credit crunch would address a lot to this, and we can discuss it more there. Thank you so much, all of you. To end with the session, may I request our past president and senior IBPC member, Dr. Bharat Bhutani, to please come forward, and let's have a small token of appreciation to Deepak Babani, sir, with a small moment of presentation. Thank you so much, Deepak sir. A round of applause for him, please. Thank you so much. Now, if I may request Hemant Jethwani, sir, to please come forward. Thank you, Bharat sir. To present the memento to Mr. Rob. Thank you, Mr. Rob. A round of applause to Mr. Rob. Hemant sir, if you can just sway back and, a small memento for our moderator as well, Ms. Deepti. Thank you so much for your time. Thank you, Hemant sir. With that, we come to the end of the session. Thank you all for being here. Thank you so much. Thank you. See you on August 2nd. That's in Taj. The session is on managing workforce, how to get the best out of the human capital. Thank you so much. Thank you. Have a nice day.